Hello, everyone. Welcome to episode 5 of NRI Wealth Builders Podcast. We're really excited to get started and chat with you guys today. But before everything, just a quick disclaimer. Everything we discuss on this podcast is based on our own experiences, opinions, research, and conversations. We're not financial advisors, tax professionals, or legal experts, and nothing in this podcast should be taken as professional financial, legal, or investment advice. Always do your own research and consult with a qualified professional before making any major financial decisions. I'll pass it on over to Nishi then.
Thank you, Sri. So before we jump into today's topic, I thought it'd be really helpful to do a quick recap of our prior episodes in case you're just joining us or you need some sort of refresher on what we've done in the past. So in our first episode, it was just an introduction to our podcast, to NRI Wealth Builders, all of our hosts here, and basically just why we started this podcast, what our mission is, and what we hope to do with this, what we hope to accomplish. Our second episode was what do we value more than money? And in this episode, we talked about something that's really the foundation of everything else. It's our relationship with money and why we think that money should just be a tool to help us live the life we want instead of the goal or our identity. And our third episode was good debt versus bad debt. We just talked about the differences between good debt and bad debt and how debt isn't necessarily good or bad, but it depends on how you build your life around it. In our last episode, we covered emergency funds and what qualifies as an emergency and how much you should save and where to keep that and how to balance your emergency fund with paying off debts and investing. So today's episode really builds on what we've talked about so far. And once you've started building that financial foundation, the next question really is, what are you trying to actually go? Where are you trying to go? What are you trying to do? So that's what we're going to be talking about today as we discuss goal setting and lifestyle changes for NRIs.
So
Mhm.
when I first came to US 30 years back, and it was 95, I think it's more than 30 years. My goal was like, okay, I come here. I'm actually primarily going there only for 3 years, and I want to really accelerate my financial freedom, like make more money. In other words, very simple, make more money. I'll be rich. $1 equal to at that time 35. So I was like. What happens really is after coming here, after a few years, you will kind of understand all the money is going to rent, taxes, insurance, and don't forget Amazon and Costco. And then India tickets, right? They become part of your life. They become business partners. So, you feel like you are running on a treadmill, right? You're I don't know how to. My dream has become, actually a drag. It sometimes feels like, I'm not in control of anything. Expenses are going up, insurances are going up, income is stable, it's not going up. And I'm like, just running faster on the same treadmill. It felt like it.
Mhm.
So today, we're going to talk about how we can get off that, how we can make some goal settings, especially for NRIs, but create a 10-year life and financial plan. Like, you can't plan everything. Even if the best plan, it's difficult to, implement everything 100%. But we are trying to do goal setting and we are trying to see if we can plan a little bit so that there is a little bit more predictability to our future. So again, plan is there to give you a direction, but think about it, plan can change. Life throws curveballs at you, but at least you're not reactive and it's not expensive and you're prepared well. So that's the idea. So this episode is focusing on planning better for NRIs. So with that, what do you guys think about why it is different for NRIs? Planning is way different for NRIs.
I mean, I think the income difference, first of all, is very different in India versus the United States. Just the currency is built different. And when you come for the first time, of course, it's a culture shock, right? On how much can you
Mhm.
spend and how much do you save? It's very difficult to even know. But as you advance along your journey and life path in the United States as an NRI. I think you start getting the hang of it and everything. But right as you figure out how much to save and everything, you realize that you haven't actually set goals for yourself to live a financially stable and free life. I think time passes like that. Um, and I think that's just a reality that people don't understand, that goal setting is really important. But specifically, like, there are lots of differences for an NRI versus someone who was just born and brought up here with, like, traveling expenses to India or, like, taking care of parents because that's also super important in our culture. Children's education is also a huge thing, so making sure they attend a good university and saving up money for that. Immigration things in the beginning of your journey as well. So I think those are just some of the differences that I see.
Yeah.
Yeah.
So one of the things I remember doing is postpone my planning because I don't know where my immigration uncertainty takes me, right? So that's probably a bad decision for me because I didn't buy a house for a while till my immigration certainty is clear, which was foolish, in other words. I'll tell you why, but there are things which are different. Because of uncertainty, you need to plan more better,
Yeah, I definitely
right?
agree. I feel like the biggest thing that differentiates someone that was born here versus an NRI is definitely the uncertainty. Like a lot of people just know that they're just going to stay in the US for the rest of their life. Like that's likely what I'm going to do. So I know that I don't really have to plan for moving to India or having a life in India. Um, but a lot of NRI just don't know yet. So it's the uncertainty that they don't know what exactly they have to plan for.
And you can't postpone because of that uncertainty, right? You can't plan for 30 years, but at least, I think we should try to plan for 10 years. And there is so much predictability to it if you can plan,
Mhm.
right? You know
Yeah.
what's coming.
I feel like for NRIs, financial wellness isn't just about how much you earn. It's also about how clearly you can plan across two different countries, two different currencies, two tax systems, and also two sets of family responsibilities and
Mhm.
values.
That's very well summarized, right? Because you have two dimensions here to deal with, and
Mhm.
that's calls for more planning, not for no planning, right?
Mhm.
You
Exactly. Yeah.
cannot be overwhelmed. So I think, like we said, we should be thinking about what it means in 10 years. Some of the things we can think about is, where am I going to stay? First thing is, am I going to stay in US or India, or moving between both US and India? What is it in 10 years from now? In these 10 years, what will I be doing? That is
Mhm.
very important because if you think you are settling here versus settling in India, the planning is completely different, right? So that's the first question I would answer is, I want to stay in US for the next 10 years. Or in 5 years I'm going back to India, but I don't think I'm coming back. Having that clarity and based on that making financial decisions makes much more sense than, okay, I will figure it out when
Mhm.
I go back to India. I think I have enough to live. But
Yeah.
that's not so straight. But I do understand the dilemma here, right? The immigration, right? If I don't know what it is, how can I plan? But immigration is just a constraint, in my
Mhm.
view. So keeping that uncertainty, you still need to plan. If your desire is to stay, you will figure out the immigration challenge one way or the other. But I
Mhm.
think you should make the decision. What do you guys think?
Yeah, I definitely agree. I also think that it's important to think about how you want your life to change within the next 10 years. Like,
Mhm.
if you want kids, that's something that you really have to think about. How does having kids change your decision on if you want to move back to India or commute between the two? If you
Mhm.
want to get married soon, if you want to buy a house, if your kids are going to college, do you really want to stay here for America for the next 4 years? There's a lot of questions that you have to answer.
Yeah. I mean, I fully agree with it. I think ultimately, like, plans can be tailored and changed, but having no plan, I think that's the issue because every single decision becomes more emotional and you have to be more reactive instead of proactive. And all of those, I think the one trigger word is it'll lead to more expenses. So I don't think we want that, but yeah.
Yeah, exactly, exactly. So more planning is better to it. But let's look at this thing little bit more carefully, right? And why it matters financially, right? Let's say you want to stop paying rent to the landlord and buy a house.
Mm-hmm.
What does it really mean? First of all, you need to decide, are you buying a house in India or here? Let's assume you're buying here just for simplicity. People have different complex requirements, but let's assume, what do you think you need to buy a house first?
I actually would love to answer this question because I was very
Mhm.
surprised when I bought my house. The way that my dad kind of sold me the idea was the amount of money you're paying for rent, you're just going to be paying towards your house, and that's that. No, that's
Yeah,
not that. For rent, I was paying like maybe 1,500, and for my mortgage, I'm paying like so much more because there's property tax, there's homeowners insurance, there's HOA, there's utilities, and the utilities are a lot more expensive than apartment. So there's a lot. And then even to get qualified for a house, you have to make sure you have enough down payment so that your interest rates aren't crazy. You have to make sure your credit score is great. There's a lot to deal with. And then in addition to that, if you're an NRI, you also have to deal with your expenses in another country. So
yeah,
it's
yeah.
very important to think about everything. There's a lot more than
Mm-hmm.
you don't even think of normally.
Yeah.
I think we can talk about it in the future episodes. Buying a house is a
Mhm.
much complex thing. It's a
Yeah.
balance, I think, right? Let's say you pros and cons, you weigh pros and cons. In buying a house, if you don't buy a house at the end of the year, let's say you're paying 1,500, that's just all expense.
Hmm.
1,500 multiplied by 12 months. But if you're renting for longer, then even more. It can
Hmm.
easily pile up to hundreds of thousands of dollars before you know it. But if you buy a house, you are committed to the house, right? The mortgage is coming, you can't get away from the mortgage, you're married to the location, you don't have flexibility. So I think there are a lot of wisdom people recommend. Don't buy a house if you're not in that location for less than 5 years because you don't know your life uncertainty. So unless or until 5 years you're 100% going to stay, at least 3 years if you're guaranteeing, then you can buy a house blindsided, depending on irrespective of market, irrespective of interest rates. 5 years is like approximately the number. You should look at, okay, in 5 years, I'm not moving away from Seattle. Then I'm better off buying the house. But if not, it's better not to buy a house. Right. So that's gives some direction. What about buying a car? What are the things we should look for?
I mean,
Reliability,
having,
probably.
yeah, just like making sure it has enough. I mean, you have enough money if you want to pay it and pay it out fully, or decide if you want to take out a loan on that, which is another, as you said, like another
Loan,
liability.
Yeah.
insurance, gas,
Exactly.
it's just a nightmare, right? It's
Hmm.
not easy. Buying a
Yeah.
car is such an exciting thing, but the,
Hmm.
the, the package it comes up with is like, oh my God, we are
Right.
Yeah.
basically making car companies richer. Similarly, kids' education is a big expense. And, as much as there are loans to support, I think it requires nowadays kids need help. Support kids' education is a big thing. At least up to high school, you have a relief in many cases if you're sending your kids to public school. But you can't escape college. All the now you want to
Mhm.
go to college, and you have to plan better. Parents' well-being, right? That's another expense, which is if not now, it will come in the future. You need to either caregiving or travel or emergency support, things like that. What other expenses you can think of, Nishi and Sri?
When you were talking about kids' education, my immediate thought went to daycare and nannies for kids because I know that a lot of parents are paying like a third of their salary just for their kids' babysitters and stuff. So I know that's a large financial burden for a lot of parents.
That's a good
Yeah.
one. Yeah, I mean, just like vacations and having good freedom too, that's
Hmm.
like spending your money for yourself. Like that's quality, right? So, but also you need to plan for that as well.
And retirement is a big one.
Oh,
Mhm.
retirement. I think 2 or 3 episodes are not enough for retirement. It's like 10 episodes.
No.
A whole
But
podcast just for
yeah, so retirement is a big thing, and you got to start. Even if you are in 30s, you need to 20s also. The earlier you start, the better it is, because otherwise you will never do it. And power of compounding, like you said in one of the episodes. Sri, compounding really helps if you start early. So, summary, right? If you think about goal setting as in terms of major life events, what are the major expenses, a major life events I'm going to have in the next 10 years? That will help you plan better. So
Mhm.
think about the life events and come back to, okay, these life events mean financially this, so I have to be ready with this. It's like buying a house is not just you go and like a car you can buy. You need to have down payment, you need to have mortgage, you need to a little bit of preparation, right? So if you do those goal settings and then come back, you are in a better shape. So what we are essentially saying is think of all the major life events, and then based on that you can plan better. And retirement obviously is one of the biggest one.
Mhm.
So before goal setting there are some traps, right? I started with the episode saying expenses seems to be more than my income, and I'm trying to run a rat race. And how do I get out of this, right? There are four pillars, and we'll go one by one. I think the first pillar we should focus, every NRI should think of, is how can I improve my household income? What are some top ideas you can come up with?
Investing in the stock market. It's
Yeah,
risky, but
right.
but yeah,
But stock market is when you have cash, first of all. How do you get to the stage where I can start having the cash?
getting
So
more jobs, right?
Mhm.
Yeah.
So yeah, so I think many cases there is only one of the spouses work. We don't know what are the variables, but even if it is a small job, it doesn't matter. I think both the spouses should try to earn.
Mhm.
Of course, there is a immigration thing and all that. Within that framework, both the spouses should try to work,
Mhm.
right? Or you can take a part-time job, and basically it need not be whole lot, but even if a little bit lot to come out of that negative cash flow and putting something aside so that you are in a much better cash flow situation, you could
Mhm.
do that, right?
Yeah.
What else you can think of?
Let's see, like passive income streams, like any sort of
Mhm.
other vehicles that can build you some sort of cash value without having to put too much work in. So, like a side business of some kind, or just, as she said, like
Mhm.
picking up extra jobs, just
Mhm.
different streams of income to help like ease the stress of like
Yeah,
negative balances.
yeah, absolutely. Anything. I mean, each situation is different, right? But I think the idea is the mindset. I have to always improve my income. What are the ways? Don't get boxed into your variables. Think outside the box and see how you can improve income. But there is also one more way, second pillar. It's not easy. Improving income is not easy. And it also comes with other factors. But you should always aspire to improve income, right? But imagine there is no limited. If you are successful in a side business, maybe that becomes your main business, right? So, think about all these things. But the second easier one is reduce your expenses. So where can you cut your expenses? Looking at your lifestyle, do you know where you can cut expenses?
Yeah, I would probably just say buying unnecessary stuff. Of course, that's the easiest one. That
Yeah.
and then probably subscriptions, just
Mhm.
making sure you know where your money is going. I think that's always a problem. It's not even that people are over consuming things, it's just that sometimes they sign up for things and they don't know. I think it's just making sure you're, like, going through your statements pretty frequently and just checking up on everything. So, that's an easy way to just, like, be aware, I would say.
Mhm.
So I did some budgeting in the past, and guess where I'm not a surprise. Guess where my maximum expenses are going towards?
I'm gonna say cars.
Yeah.
No,
If you're- oh,
house.
House,
house
yeah.
mortgage or rent, right? Either
Yeah.
one, property taxes, right?
Mhm.
So household expenses are the most like rent. So now think about it. Do you really need to stay in the downtown area, which I know you really like it, but how much are you paying for the location you are choosing? Is it
Mhm.
really necessary? Those are the questions we can ask and reduce some expenses. Do you know what is the second most expense Americans don't realize they're paying? Taxes are the second most expensive line item in the budget. And we worry about eating less food. Why don't we worry about taxes? You can always find out ways not to pay taxes in your own capacity. So reducing expenses is possible, but there are some problems and there are some nuances you have to deal with. But you should check with your CPA how to pay less taxes. But we will touch upon that subject in the future. But one thing I want to tell about expenses is don't cut your expenses so much that your life becomes mundane, very boring, right? I think you need to have a balance. You need to have ask tough questions. If you're a bachelor, do I really need to stay in a single bedroom apartment? Why can't I share? If I have married and having kids, do I really need a 5 bedroom, 4 bath palatial house? By making my landlord rich and banks rich, all that. So you should ask some tough questions and make sure your lifestyle matches your expenses and what is needed, what is wanted. Define it properly.
Mhm.
What do you think, Sri? Can you summarize this if you can?
Yeah, definitely. I mean, I think based on your last point, you can only reduce your expenses to a certain point because you can't budget your way all the way to being rich, right? But you can only stop the expenses that I was talking about before, the ones you don't know about, you can stop the leakage. So, that's just an easy way to say it, I would say.
Yeah. So summarizing again, one is figure out ideas to improve your income, always improve your
Mhm.
income. Second is always think of reducing expenses. The third pillar is reducing risks. What is the biggest risk immigration immigrants have? Their immigration risk, visa status, their green card status. Nothing is permanent in this world, right? Do you have any experiences you want to talk about, guys? I know you both were raised here, probably born here too, but any risk your parents went through?
I mean, I think early on, yes, there was lots of risk right when you come, and then you're struggling to deal with all of the new aspects of the country and all the nuances that
Right.
come with that. So I would say like lots of risks early on. Over time, you start learning about how everything works very differently here, insurance wise, like health insurance. All the insurances are huge in America, right? There's
Mhm.
lots of costs associated with that. I guess I would
But
say
but
those are
the
the big
thing is
things.
employment, right? Employment is a major thing, right?
Mm,
If your visa is expiring and if you're not able to plan your financial future, it's going to put all your thinking in a jeopardy. Every
Mhm.
time you go out and come back, you have to go through a lot of challenges. The family goes through a lot of risks. So that understand this, right? If this happens, what do you do? If something happens with your immigration, it is very likely to happen. First of all, I think what you should do is do not break any immigration rules,
yeah.
right? Any immigration, it's not worth it. Don't do it. So talk to your lawyer, find options if there's job situation or something like that. Don't break any immigration rules. It's a long-term problem. And then
Mhm.
we'll talk about it money wise, how immigration can be managed. And everything has to be legal. And we can manage some of this risk. But it's a risk. You need to plan it, right? If it happens, then what do you do, right? If you lose a job and you're out of status, what do you do? It's all about employment. So,
Mhm.
what can you do to avoid this? Minimize it. You know it is coming. You know the date. So, what can you do before the date expires, right? And then market risk is one of the main things. If you're investing in stock market, how do you reduce the risk for market exposure. So you are a financial advisor. How do you reduce the risk in the market, Sri?
Yeah.
Very high level. You don't need to go really deeper, but
Yeah, that would just be allocating your funds properly and making sure everything is diversified. What else can I say? Making sure there's a good balance in the portfolio. Like, there's a small principle with how you should be investing. If you're
Mhm.
like 20 to 50, I'm going to say it should be pretty aggressive, right? But that would obviously come with how is your status looking? Is there a chance that you would need to pull out money at any last second based on employment? Like that, all, of course, looks different with each person, but you should be pretty highly aggressive with how you're investing early on. But as you get older and older, you should be lowering that risk too, just because of there are, of course, risks associated with it. So that's what I would
Mhm.
diversifying is really important.
Absolutely. Diversification. Again, we'll go deep in the future episodes. But understanding that there is a risk like that and you manage it helps you a lot. This is one common thing I see in NRI families is lending money to friends. I personally have a lot of experience with it, but do you guys have a perspective on it, lending money to friends?
Yeah, I feel like you have to first take care of yourself and your family and budget for it. Like you have to specifically budget money for what you're comfortable lending because you can never really expect to get that money back. Like if you get the money that you gave out back, it's fantastic, but you can never rely on that. So it's very
Exactly.
risky.
Yeah, I wouldn't lend it first of all because it's either
Mhm.
money or friend. One of will get damaged, right? Either your money is lost or your relationship is lost. You don't want either of them. So it's
Yeah.
better to avoid as much as possible. And there are a lot more avenues in US compared to India to get loans like credit
Mhm.
cards, personal loans, just direct them, help them to get a loan. But if you're giving, like you rightly said, Nishi, say goodbye to that money for a while. Right? Think that that money is not coming, then only you give. Then you should be okay, right? You're helping a friend. But if you're lending money, I think I will be very, very careful. And I've had the mixed results. In one case, I've not got my principal, big money. In one case, I'm getting my principal, but it's been a little bit unpredictable, I would say. So there is a lot
Mhm.
of risk in lending money to family or friends. Should not do it as much as possible, should not do it. Same thing with business, right? The business carries a lot more risk than putting in a stock market. Liquidity is a problem. You could lose your whole money, right? So these are some of the things which you should do it. But you also know one important thing: without taking risk, there is no reward, right? But for example, how can you improve your cash flow? Let's say you're doing part-time job, you might have a challenge with the part-time job. Your health may get affected, right? So without doing part-time job, if you're not able to manage it, you shouldn't do it.
Mhm.
If your health is more important, you shouldn't do it. Similarly, if you have to think harder, you have to manage this risk. So it's a balance of all these things. You're juggling with all these things. But I would summarize, right? The goal is not to avoid all risk. You cannot not take risks. That's a bigger risk, actually, right? The goal is to avoid foolish risk and take calculated and intelligent risk. Do you guys agree?
Yeah,
Yeah,
definitely.
definitely.
Yeah. So three things, right? Increasing income, reducing expenses, reduce risks. Now, fourth important pillar, this is like key milestone of all our goals, and we'll go deeper on this, is how do you actually come out of this rat hole and make sure you have a buffer? And that is systematic investing, right? If you are able to generate a positive cash flow by doing all the three above, improving income, reducing expenses, reducing risk, that's the goal is to generate a positive cash flow. And that positive cash flow, if it is available, what do? You spend it. right? If you are able to generate the positive cash flow and you're able to invest consistently, and that investment becomes much bigger. Before it comes to the paycheck, you pay yourself, like pay your 401k or pay your savings account first and don't touch it. Think that
Mhm.
it's not there. And you do it only for emergencies and things beyond your control or buying a house or bigger expenses. But first thing is create a positive cash flow and then keep investing on that positive. Pay
Mhm.
yourself first. There are many ways you can do it. Direct deposit, directly move it to
Mhm.
your 401k or whatever, right? What are your perspectives on this?
Something I feel like I've learned throughout my years is that I feel like investing isn't just finding the perfect time to start or waiting until you have a huge amount of money. It's really just
Mhm.
building the habit of being consistent and actually remembering to do it every time, every paycheck.
I think it should be automatic. You should not even
Hmm.
remember.
Direct
You have
Mhm.
to
deposit.
deal
Yeah.
with the extra, right? Sri, you were trying to say something.
Yeah, I mean, I was gonna say something similar. I think it's just like start small. The time value of money is important. So it doesn't matter the quantity, it's just time again. So just get started on it. We talked about emergency funds last episode. So just making sure there's not too much sitting in that because that's money
Mm,
that's going to waste. It's depreciating if it's
mm.
sitting liquid. So there are lots of things to be done, but it's just making a strategic plan around it.
Yeah, I think all these things are very important, but consistency,
Mhm.
start small. But
Mhm.
still, if you don't fix your cash flow problem, that small may not help, right? But small is at least better than doing nothing, right? Start
Mhm.
small, but make it consistent. Even if you have, like, let's say, $1,000 per month, by the end of the year, it's $12,000. And if you
Mhm.
add stock market and all that, even if it is 10%, that's like 13,000, 14. But
Mhm.
if you can add another zero, that will be great, right? So it's all about cash flow. So if you understand your cash flow, you keep investing over the time, it will be very handsome money, especially time value of money. Do you want to
Yeah.
summarize, Nishi?
Yeah, yes. I feel like the biggest enemy of systematic investing is emotion, fear, and distraction. So, systematic investing is not about timing the market, it's really building habits that survive those enemies, the emotion, the fear, and the distraction.
So again, to summarize, four pillars. One is improve income. Always keep thinking about improve income, right? Reduce expense. How can I reduce my expense? Like, share subscription. I don't know, whatever it takes, right? And third, reduce risks, right? A risk has to be first identified, planned, and mitigated, right? All the above three should act towards the fourth pillar, which is systematic investing. So we are almost towards the end of the podcast, and I was trying to come up with what we can do, but this is more like a thinking, but it'll really help if you can put this down in a paper. First question I think you should ask yourself, take a piece of paper. Where do I expect to live in 10 years? US, India, or both, right? And have that clearly defined. If you need to take time, but answer that. Life will change, okay? And priorities might change, but at this point, where do you expect to live in 10 years? Have that in your plan. And the second important thing, which is kind of precursor to buy a house, is will I stay in the same city for the next 5 years?
Mhm.
That, yes, it's better to buy a house. Imagine a city like Bellevue, where I live, which is a Seattle suburb. The rent is for a two-bedroom, I think it's around $3,500. Imagine the amount of rent I'll be paying in the end of 1 year. It's like down payment for a house in another area, not in Seattle, of course. But so it's just a lot of money. So if you're doing it, multiplying it for 5 years, it's just ridiculous amount of money. So think about it. If you are staying for 5 years, the math says, the experts say that it's better to buy a house. But again, your variables are different, so calculate them carefully.
Mhm.
And think about it. What are the top five life events in the next 10 years? How do I plan my next 10 years? What of those require money, right? What is one action I can take right now, this month? Think about all these things. I think these are some of the ideas to think about. We'll try to put some of these in the podcast link. So I think the summary is you cannot solve your entire life in one setting. You cannot. You just cannot. So you put your assumption on paper, get the clarity. That clarity will give you control. I think that's what we are trying to say. Get some clarity and use these four pillars to structure your thinking, right? So for NRIs, goal is not just about becoming rich. It is about creating freedom across borders. You said that in the beginning of the episode, Nishi.
Hmm.
It's freedom to support your parents, educate your children, travel without stress, retire with dignity, and make decisions with confidence.
Hmm.
Your goals may change, but your discipline should not.
So, in future episodes, we'll go deeper into income growth, expense control, risk management, and systematic investing for NRIs. And I feel like today's episode was such a great introduction to all of those. Thank you so
Yeah,
much,
this.
everyone, for listening.
Yeah, thank you very much, and I think you will put use of this episode pillars and make some bold decisions for your life. Thank
Yeah.
you.
Thank you, everyone.